What's up, guys? For today's video, I'm gonna go over, a couple things that have been asked, as well as something I think is pretty important, and can help us, with the conviction of taking plays um, off of a failed call or put trigger, right? So, first thing, um, going over, relative strength versus relative weakness in a market. Today SPY goes to all-time highs, right off the bat, jumps out, something like that. That's pretty crazy, right? But what my first play of the day was PayPal, and I played puts on it. And the reason why I played puts on it, right, is because we had these were my original triggers from yesterday. Calls over 193, puts under 190.75, which is down here. Um, but um, what I like here, this first candle closes way above 193. So I'm gonna wait on this retest, right? We do get a retest here, which you could have played. Probably not very many gains because it gets stopped out again. But knowing that SPY is ripping and that PayPal cannot hold this 193 level, we know that PayPal is going to be a weak ticker for the day. And that's something that really caught my attention early. So I waited on this retest here because I don't like to play tickers within the first 15 to 30 minutes. Liked the premiums to settle a little bit. So I didn't actually end up playing it here, but we did have this close under the 193 level, which was our original call. So I'm going to flip that over to puts, right? So I waited here to this retest, and this retest hit VWAP, but closed below both VWAP and our original call trigger. So I'm entering my puts here. Why? Well, first off, it is below both VWAP and our call trigger. But SPY, if we look at SPY, that's about right here. SPY is absolutely ripping. We're closing above all-time highs, continuously pushing off of these VWAP, and there's little resistance up. Okay, cool. But on the contrary, PayPal, PayPal cannot hold this 193 level. So I know that this is going to be weak. PayPal then tanks down. We get some good gains off of this. We never really have any threat or anything until this VWAP retest, but it was again denied. So you could play this multiple times, just knowing the weakness of PayPal in a very strong market, which is something that can really help with both conviction and um, with plays off of these failed call and put triggers. And all a call and put trigger is for me is just a key level, a pivotal point in which a big move could occur, and that's something that's really cool. We see here with PayPal, and also always having SPY open. Whenever I am day trading, SPY is always open. Um, Not only does it help me with assessing if a ticker is strong or weak or not, but I also can see if it's going to pull back, when it's going to pull back. And when we have a ticker like PayPal that is weak on the day, when SPY does pull back, because it's going to pull back at some point, we know that's a good time to scale out as well. So here would have been a good time to scale on SPY, and then we could add it up here if it's still weak in the market, which it was, but a good time would also be right here to sell, because we see that SPY finally ran into some resistance up here around 476, 477 area. And a weak ticker is going to hit the pullbacks on SPY harder than a strong ticker will. So that's something to keep in mind when trading, is the overall strength or weakness of a ticker, because it can help us getting plays that we didn't really think about at first, and also adding to that conviction is something really important. On the opposite side, a ticker that's really strong in a strong market can also help with staying in plays longer, right? So AMD, for instance, AMD, my original call trigger here was 147.6. We get the close above original, whatever. I'm going to let this ride up a little. It does hit this 150 level, so I'm going to wait, see what it does from here. I entered here on this VWAP. I actually didn't play AMD today. If I were to play it, I'd probably enter here, just because my risk to reward's better than, say, if I were to enter on this one here, because we do have that possible retest down here. But so I enter here, I have multiple things to enter on, being I have VWAP adding to conviction, also a strong market in SPY that's ripping to all-time highs. So that's a decent point to add in, and then we can just let it ride. At that point, scale when we want. Scale up here at this 152 level, hit it almost perfectly, and then let them ride. But when looking, we look at the day. Oops. We can look at the daily as well to see, will a ticker possibly be strong? Will it be weak? And then one thing we notice here is this bull flag on AMD. Looks like it broke out, let's see, yesterday, about 2 days ago. So, we see here, and then it's continuing momentum up with not that much resistance, as SPY is absolutely ripping. So that's something to keep in mind. When we have a trend day, it's important to make money on those days, right? When one person or one side is in control, it's easier to make money on those days as opposed to the sideways chop days where you don't know when or where a chop's going to come in. So days like this where we have buyers obviously in control, bulls are definitely in control, it's a lot easier to stay in the plays longer as well. But on the contrary, we can use that PayPal example. A ticker that's weak, we can also play on a failed call trigger a lot easier and have more conviction, knowing that the market's absolutely ripping, but this ticker cannot hold a very key support level. All right, for this next part, the question was asked, what makes a ticker stand out in the flow that really grabs your attention or really makes you choose one over the other? And for that, I'm going to use AFRM from yesterday for an example. So AFRM yesterday, these are going to be a little bit different. It's as slow as hell. These are going to be a little bit different because this is today's flow, not yesterday's. But anyways, yesterday, this 110 call was third highest on the most active chains, and AFRM finished today at 101.5. So that's, $8.50 move in a week. So that's something that really sticks out. When I'm looking and assessing what exactly, makes one ticker stand out more than the other is how close it is in days till expiration and how far out of the money it is. Cool. So even looking at this today, we have this 120 call, 12/31 this week expiration, a 120 call. That's let's see, $15-ish out of the money from our closing price. So that really sticks out to me as well. We also notice that it's a pretty bullish flow. So if we can combine that with our levels and the TA aspect of it, we can really help to narrow down these plays and see where we can get the biggest move. Another example of this would be, we'll go back to this hot chains and tickers, would be today's, this will actually be on today's watch list. Is the first one will be Apple. What sticks out to me about Apple? All right, first off, knowing the overall personality of Apple, it tends to move in conjunction with SPY. So I know that right away, right? SPY's ripping to all-time highs, cool. So I know that this is probably going to be a bullish chain to start, but I want to see, how far out of the money are these calls and how close are they in expiration. So first thing that really sticks out to me is this 185 and this 190 call. They expire this week. Apple is ripping to all-time highs. Potentially, if we can break through 120, 182.09. So that's pretty cool to see. But what also sticks out are these puts right here. We have this 12/31, 175, 177.5 call. So I can play both sides, and these are both decently out of the money, both on the call and the put side. So this makes Apple really stick out. So next, I'm going to go over and look at Apple. I don't know why I clicked that. It's right here. So I'm going to click Apple. I'm going to look at this on the daily. On the daily, I noticed, this bull flag after some consolidation here, another bull flag, and a break, which is really cool to see. But I also know that it runs a SPY. I see the flow, and then I know on the upside, if we break past this 182.13 area, we're flying to all-time highs. Cool. I also know if SPY, takes a little day, pulls back a little bit, we could play this downside pretty well, based solely off the flow. As we see, there's good volume in the 177.5 and the 175 calls with close days to expiration. That's the most important part, right? Is as a day trader, we want a lot of volume in these calls or puts that are close to expiring. The further out of the money, the better, as that can act as a magnet for the ticker, right? So the further out, the more possibility of the big move. And when we're playing options, looking for the big move is always something that I like to do, because it could give me a lot of different ways to play it. Both up and downside is another really important thing. So on this, I have a put trigger 178.45 and then 181.5 is my call trigger on the upside. But the reason I chose Apple, in conjunction with testing all-time highs, is mainly based off of this flow, and seeing these close days till expiration out of the money calls that have good volume, so I can get in and out of quicker. The second example from today is Microsoft. This one's also on my list as well. But when we look at Microsoft. All right, when we look at Microsoft, what's the first thing that sticks out to me? 350 call, 355 call. Let's see, yeah, 355 I think as high as we go. Cool. We have higher volume than open interest, close days till expiration, $13 out of the money. This is an $8 out of the money. It's pretty high up here as well. And then when I go to look at it on this, just pairing this with some simple TA, some key levels, I'm going to go to the daily, right? We see on the daily, we again have this descending wedge bull flag with a break up towards possible all-time highs. There's little resistance on the call side, but we also know that it could pull back and retest around 335 area. Looks to be a big area. So that really helps when looking at plays, how to determine one's better than the other, one could possibly have a bigger move, is we look for the further out of the money as possible with the closest days till expiration. Weeklies are definitely more of a telltale sign in the short term, as opposed to if we were swinging, we're going to look for those unusual volume, unusual OI on tickers that are a little bit more out of the money, but also have more days till expiration. I would show an example, of how I differentiate one ticker from the other, but today's chart and today's flow is very bullish, as we had a trend day with SPY ripping to all-time highs. So most of the calls are pretty far out of the money, but when how I differentiate that is just looking at our daily. How much possible room do I have? On Microsoft, there's a good amount of room. On Apple, there's a good amount of room if we can break through all-time highs. We also have 1, 2, 3, 4-ish green days in a row. So I know that a pullback down to these levels, 175 area could happen as well. In terms of a smaller account play, this one's on here is NEO. When looking at NEO, first thing that sticks out to me, this is a solely based off of flow play. Why? I'm going to go to these hot chains and tickers, find this bad boy NEO. Where are you at, NEO? Am I blind? There you are. All right, so as we can see on that daily chart, right, NEO didn't have the greatest day. It's a red day on a very strong market trend day. Okay, cool. But what really stuck out to me, when looking at this flow, is it's a very bullish flow, even with a pretty bad day. We have calls that expire this week all the way up to 35, with a lot of hits in this 32 to 34 area, which is a decent move. A $2, $3, $4 move on a stock that trades usually about 1.5 to 2.5, $2.50 every day. So that's a good move as well. And this really sticks out here. It's just assessing this flow, and we can play both sides. We do have the 30 put, 29 put, but when we are looking at flow and determining one play from the other, on chop days or days where our market's moving sideways, it really helps to differentiate and pick out the plays that can move the most, because we have, based solely off of um, close days till expiration paired with how far out of the money are these calls, and using, the hot chains and ticker top 100. All these tickers are going to have good enough volume to get in and out of the play fast enough, and not lose too much money, not getting filled, stuff like that. So that's something to keep in mind when trading, and when building a watch list. Keep those first 50 to 100 names in mind. Go through, break them down, look at the flow, really learn how to interpret that flow, and assessing that close days till expiration added with our FAR OTMs can act as this possible magnet, and can make for a big move in either direction, depending on if it's a bear or a bull side. So that's something that's really cool when playing tickers.